All right, folks. Sorry I'm a little late. I was just I was in the weeds on something, you know?
Yeah,
Sometimes that happens. How's everyone doing today? Say hi in the chat. How you doing, Blake?
I'm doing fantastic, Alex. It is good to see you on a lovely Monday. I saw you call a really good trade out there, Bull. That's a great one. It's up quite a bit today.
It is. Yeah, our well, we're up. Yeah, it's been a little we were up like 20%. We're still up 2%, a little bit of a pullback from when we got in, but I'll show you why I'm staying in. I don't know if anybody, raise your hand in the chat. Tell me in the chat
Recording in progress.
if you're in this if you're in bull. Um but let me go ahead. I'm just gonna get everything set up. Gotta
Oh,
get
there's
all
Crystal.
my
She's in Bull.
Crystal. What's up, Crystal? Let me go ahead and share this. Where is Zoom share?
Let's see who
Zoom.
else we got in the chat. We got Catherine, Maggie. If you guys are out there, let us know. Love to
Yeah,
hear from you.
so two reasons. One, we got in when there was does anybody remember there was two bull calls? No, there's maybe three. I think there's maybe three, but there's been four or five more since we basically took a position in bull. Um, it was a nice little cheap contract. Uh, let me go to the daily chart, look at it here. Boom. Oh, nice. Oh, wow. Actually, that's recovered a lot. Wow, look at that. I wish our option was doing better. Why isn't our option doing any better? Dang it. Well, we're still up 2%. But if you look at the breakout here on the 9 and the 20, you'll see that it is above the 9. The price action jumped above the 9, and that's pretty bullish. That's pretty bullish, right? So I'm looking for this to cross over. Again, this is a 26. This is this weekly expiration. So a few days to play out. But I mean, this is typically when this happens, typically pretty bullish move. Um, I do believe that the 9 will cross over the 20 tomorrow. So we're going to keep on holding for that. Oh, now we're up 10%. Okay, now it's kind of coming back. Nice. All right. So we'll see if we can get like a 20 or 30% by the end of the day. We have like an hour here. Probably just get out. Or at least, we can trim our positions too, but that's pretty good. Um, but yeah, I'll keep you updated though.
Chris, you look like Kane today.
I I sent him Kane's link on accident, but I had to get
Oh,
him
I
in
see.
here.
Yeah,
I was like, wait, what's that?
Man, Kane, you've changed.
Yeah,
He changed
it
so
was,
much.
man, it's stressful launching a new course, huh? For,
Yeah.
for Kane.
What's up, man?
What's up, guys? All-time highs led by two companies today. Congratulations. NVIDIA just decided to wait till a major OPEX cycle to do any type of movement. It was a nothing burger since earnings, and now it's up 3.5%. Apple and NVIDIA alone carrying the torch with the only two bright spots on the market's heat map today. And yet the market's at all-time highs by a pretty good clip. Yep, crazy, man.
Yeah, there was a lot of options flows coming in on Apple today. But like I don't know, they're not as indicative of big companies really, because like yeah, well, I mean we can talk about billion-dollar companies, but Apple's a trillion-dollar company, $3 trillion company. It's like even if you have a lot of flows coming in, there's just so much options volume, right? It's like
Yeah.
it gets lost in the sea of money. So, but hey, I guess it could have, I guess it did kind of coincide with the price rise.
I tell
Wow,
you,
look at that.
if you, I mean, looking for something for longer term, I don't know how much y'all build computers or ever have or had to fix them or anything like that, but those old hard drives that used to be in there that look like a record player, little stylus and spins and everything like that. Um, there's all of a sudden a huge demand on those for storage because they can store a whole lot more than a solid state drive, and it's more reliable on a longer term basis. So everybody in the AI industries now are going out and buying these huge hard drives from Seagate, STX, and Western Digital, WDC. And you can see that they're looking smoking right now, and I don't think there's going to be really any end in sight. Their sales have picked up big time on their hard drives over the past quarter or two. So beware of that.
What was the other company?
Western Digital, WDC.
STX. Ooh. Interesting.
Now, do you buy them here? Probably not, right?
Yeah.
But I mean, I think if Chris is looking for something for one of his programs to start doing some little put stuffs and maybe
Some ratio spreads,
ratios
man.
and everything like that, I
Yeah.
think these two would be great for you, dude.
Let me see. Let's take a look. Let me go fundamentally first, even though that may not really apply to just things that are just ripping like crazy. Let's go STX. STX. Forecast to grow 32 times earnings. It's fair. I mean, it's fair. Like fair value, discounted cash flow, 230. Price is trading 230. So, I mean, I would probably just drag a big fat swing from 63 up to 230. And if I can get something maybe under the 50%, if we drag a fib from low to high, anything under like 150 or 145, I think that's a pretty good discount.
You're looking
And
at
look,
STX or WDC?
STX. They're probably going to be very similar, but look at STX. The moving averages that I like, the 50, the 100, the 144, the 200, all of those clusters are sitting around like 150 to 130. So if I could do something in the ratio spread arena, and it's so hard to see a stock like that and be excited about like buying it. So I obviously am trying to get like a massive discount. So STX, I mean, Ivy Rank's pretty solid. We've got earnings on October 28th. Maybe something if it's like really generous out to the end of the year, just kind of get like this overall like the rising tide raises all ships type thing like out to January. Let's look at the one. It's not bad, like a 150 by 145 ratio spread. I mean, it's $1.15. It's income. I mean, for my margin accounts, it'd only tie up about $1,400. I'd make just under 10% on that return on like liquidity, I guess. So not bad. I mean, it's pretty wide. I've got a bid at 105, mid at 145, ask at 185. I mean, a 150 is not bad on that trade. If I get filled for like 125 to 150 credit, I don't mind throwing it out there. That's just, it's so high, man. Like what's that stock up? 400%, 260% since the April lows. That's got to be one of the biggest out there.
Yeah.
Like, I mean, we've had lots of 100% movers, but 260% is a monster. Wow.
Yeah, this is crazy. QuantumScape is another. What are they're another like hard drive. What does QuantumScape do? For some reason, I feel like they're kind of similar.
What's the ticker? QS.
QS. What does QuantumScape do? Let's see. Quantum's battery manufacturing. They're battery.
Oh,
They're
so we got
solid-state
electric
batteries. I knew it
vehicle.
was solid state something.
What else? Is it solid state lithium metal batteries for vehicles? Is that it? That's an EV only? Are they like branching out into computers, data centers, anything?
Electric
Maybe my
cars.
concern.
It says electric. It says electric cars.
Yeah, I don't know. That's hard because we had like the electric vehicle pump, all the SPACs were coming out during like 2020, 2021.
Yeah,
those all turned to crap. So I'd be skeptical of QuantumScape is if they did like batteries for computers or internal components for computers, data centers, storage, like I'd be more willing to jump into that versus just cars, because until we have the global grid, or at least in the US, we have the ability to charge cars conveniently. Some places do. It depends on the city location, or you got to retrofit your house for EV plugins. I don't know. I'd probably steer clear unless they can expand beyond just cars.
Well, I got to say, that's got to be one of the shortest descriptions I've ever seen.
Yeah, right.
I mean,
Solid state lithium metal batteries. That's all they
yeah,
do.
for electric vehicles established
Yeah.
in 2010.
I'm pretty sure the CEO is like this Indian guy who wears a turban. I remember because I think this was one of those you saw about those SPACs back in 2021. This was like a huge company back in a huge meme on like Wall Street on Wall Street bets back in 2021. It just soared. Like, look at that. Woo!
Wow. Yeah, that's pretty much what like all those things did. Like Rivian popped and Workhorse popped and Ride popped and Lordstown Motors popped and yeah, they just all turned to crap. So
Yeah.
a lot of people got stuck holding that bag for sure.
Yeah. Most definitely. So we have some interesting earnings this week.
Micron is one.
Micron, BlackBerry. BlackBerry's Thursday.
Costco's on Thursday, I think.
Costco.
BlackBerry still
Costco
has a stock. Man.
What'd you say?
I said BlackBerry still has stock.
Yeah, I know, dude. Dude, the volume is more than some like actual like companies, man. Like it's
Is that right?
Options trading volume is insane. Yeah. If we come over here and look at if you look at BlackBerry, look at well, I mean it's not huge, but it's like, 51K options volume today, which is, I mean, look at all this I can show you guys. But like, look at all this open interest, man. There's a ton. People like to play BlackBerry, dude. I don't even know what they do anymore. But I mean, right, for a $4.39 stock, having this much options volume. You come
Yeah.
over here, it's like 51K. It's crazy.
Wow.
Yeah.
That's crazy.
Yeah. Costco is we already at Costco. Costco is Thursday. Well, everything's moves on Thursday too, right?
No, I think Micron's tomorrow.
Oh, yeah, Tuesday after the bell.
Yep. I closed out of I don't know if I took it in this session. I feel like Micron was either in this session or one of my YouTube sessions, but I did an out of the money bull call spread. That was like out to June of next year. And I was like, well, I think this at the time we were trading for maybe let me look at the price. I think we were trading in the 100s. Like, let me go Micron. So MU. Let me find this. The heck, dude. Okay. Micron. Oh yeah, this first little pullback in like the 120, 110 zone. I did a June bull call spread and I did like a 150 by 170. And it's not in full profit, but it was good for like 250% gain. So I paid like $3 to make 15 and it was up like $450 to $500. So we took that in my, I think I put that in for Project Options Edge officially for my service. But yeah, we took a nice little winner. I'm just not going to sit here and wait until like, oh, maybe until June of next year, I'll just hold it. I mean, it could pay, $1,100 or $1,200 by June, but that requires also price to stay exactly where it is or go higher. And I'm like, well, if we have a pullback from this, I don't know, 50% rally in the last month, I think I'm going to take the profit now. I mean, some of these moves are just, 2, 3, 4, 5 standard deviations above like the norm. But I don't know, man. I feel like the playing the game of like calling the top is just probably the worst strategy in the world right now.
I know. I saw a headline on CNBC today. It was like Spitznagel was like 29 crash coming. And then it's like, all right, bro.
Yeah. Let me ask you guys a question. Did you see the big change in AAII sentiment last week? Did you see that the neutral party finally got off the fence and jumped into the bull camp? Can you pull up the website, Alex? Go to AAII sentiment or just pull up the website.
In NAAIM?
Nope, this is different. This is more like how it feels out there. So AAII.
AAII.
Yep.
Sentiment survey.
Yep. And historically, the market is like 37% bullish, 31% bearish. The last like 5 or 6 months, it's been like 40+% bearish. So this is kind of a cool reading because what it shows is, You go to historical averages, 37.5 to 31. It's usually favoring bulls. But look at the jump in 917, which is last Wednesday's print. So we went from a 28% bullish sentiment to now 41.7. And look at the neutral. The neutral went from 22.5 down to 16, and the bears went from 49 to 42. I know that we've talked about, like, I think what's driving me crazy is this like technical correction. We don't have it yet, but I'm like, what is the technical correction? What is going to be this potential catalyst? Nothing until it happens. Nothing until, like, now that the FOMC low last Wednesday is like the low that has to get taken out. But I almost wonder if last week's big pivot in sentiment, and let's say we print another one that does it, if this sentiment is getting a little bit more bullish, I just think to rattle them a little bit, you shake them out with a contrarian play, which is this market has like a 5% pullback or 10% pullback, because people are like, all right, I've sat on the sidelines for a 40% rally in this market, and now I'm going to start buying at all-time highs. And it's that type of like super late, super lagging sentiment that's like, now they're starting to be bullish at, whatever, 10%, 11% above all-time highs. And I don't know. I'm trying to look at a bit of a contrarian play. I did a little AI deep dive last week on the 50-day moving average and how long it's stretched and stayed stretched. We have had longer periods where it goes 102, 105, 112, 128 is the max days above the 50-day moving average on the daily time frame for the S&P. But we're at like 93, 94 today. Like, we're getting up there. And point-wise, I don't think we've ever gotten over 300 points beyond the 50-day moving average. We're at like 270 today. We were at 280 when we had a pullback July 31st and August 1st. So I don't know. And maybe I'm just beating the same drum with this stupid short-term top that's, I'm just going to eventually lose my patience and I'm never going to call it, but it'll happen. We're going to hit it. Like, so we're going to hit that damn 50 period at some point. It's just, I thought, okay, we got through the OPEX last week. We survived the Fed. The Fed's not the catalyst. Buy the rumor, sell the news didn't happen. 0 day last week, I was watching the 0 day flows. There's so much like positive gamma in this market. It's just floating this market up. It's like every day, just do a bull put spread at the open and the market goes up. You get paid. It's like the stupidest trade right now that's working. It's fine. Like, I just think it's technically, like, I'm annoyed. That's all. I think the market needs to have a bit of a correction. I hope we can shake out some of the loose hands that's buying into these. I mean, imagine this. If you missed a 40% rally in the market, or you look at a Western Digital that's up 200% from the rally, and you're like, I think this is a good stock to buy. I don't think you should be rewarded for that. You shouldn't be rewarded for sitting on the sidelines for 5 months doing nothing. And now at 10% higher highs or 10% above all-time highs, you're like, I'll get back in the market. I'm going to close up my money markets. The yields are going down a little bit, blah, blah, blah. It's like, I don't think those traders should get rewarded at all. So I don't know. That's my short-term contrarian play.
Yeah, I mean, if you keep on calling it, eventually it'll happen, right?
Well, yeah.
I'm just messing with you.
Yeah.
But
No.
like, I mean, that's, dude, I don't know. I mean, I'm in your same camp, dude. I thought like it would happen before, but it's frothy out there. But like, since now sentiment is, this is what is this? This AA, is this institutionals or is this like regular folks? Who is this?
It's kind of a regular folks, individual investors.
They didn't
But a
call
lot
me.
of it, they could be like family offices. So it depends on the size and scope. But this usually is like seen as kind of the contrarian play, because it's typically like individual investors like dumb money.
Yeah.
Right. So individual investors that are like now getting convinced that the all-time highs and a 10+% gain above all times are like, yeah, now they'll start jumping back in. They'll dip their toe back in the water. So and I think this, I mean, to be fair to the contrarian, which I have been, the reason I've been bullish this entire rally has been because of that AAII. Like, everyone's been sitting on the sidelines with terrible sentiment, bearish. And it's like, the pain trade is the upside. The pain trade's the upside. So now that it's flipping into like, hey, the bulls are getting a big jump. The neutral party is going to is reducing. The bears are decreasing. It's like, yeah, it's a contrarian play. So I'm curious if that sentiment has anything to do, and that prints every Wednesday. So that's something I watch between the NAII or the NAAIM, whatever that one is, and then the AAI.
They
so
both
those two.
both print on Wednesdays. Actually, it's funny.
Is it okay? I thought the NAII or NAAI was Thursdays. Either way.
Oh, maybe it is Wednesday or Thursday. I might be wrong.
Can I ask something real quick? How's the market normally behave like during rate cut cycles?
Interesting you bring that up, Blake. Here's a pop quiz question for you guys. Do you think that over the course, let me find, I took a screenshot of this in a podcast I listened to this weekend. Let me find it. So the question is S&P 500 forward returns. This is from 1982 to now. Following rate hikes or following rate cuts, which do you think the market actually outperforms going forward returns over 6 months, 1 year, 2 years, 3 years, 4 years?
Yeah, well,
Rate hikes.
people in the chat can drop it in, but I do. Yeah, I'm gonna say rate hikes actually.
Okay.
It depends
You guys
on
are
why.
correct. You guys are correct.
Really?
So it's, I mean, and again, to put it in context, they both make money. So none of them are like, oh, they're down. No, they're all up. So 6 months out, a rate hike cycle out 6 months is up 6.2%. A rate cut 6 months out is up 5.7. So you get a 0.5% increase on the rate hike side.
That'd be
1
bigger
year,
than that.
1 year out, it gets pretty substantial 1 year out. 15% for hikes and 11% for cuts. 2 years out, 33% for hikes, 27% for cuts, 45% on 3 years out, 45% for hikes, 40% for cuts. And at 4 years out, it pretty much is a nothing burger, 62 and 60. So it just like, it like narrows the gap after, you know, time horizon of 4 years. But I'd say that like 6 months to 2 years, you know, that's anywhere between like a 1 to 6% difference favoring hikes over cuts. So,
Well, I
but
was just thinking that when you're raising interest rates, you're trying to cool off well, what used to be, let me put it that way,
yeah,
was a burning, I mean, just a smoking economy. It's just all gangbusters and off we go. Nowadays, how much money did they dump into the system to, overflow everything and have inflation go berserk, and we don't have a booming economy. So,
yeah,
I
we
mean,
never like recessions don't exist anymore. We'll never have a recession ever again.
exactly.
Plunge protection team.
That's right. Yep. I mean, it's either the president or the administration or the Fed. Also, one thing, this is an interesting theory for the rest of the year. Alice, can you bring up like what are some of your non-US exposures? Does it, you guys not like China, Europe, India, Brazil, anything like Latin America? You guys look at anything like non-US?
I have Mercado Libre, but that's the only Latin American one. We're in a trade with FXI and from our unusual flows, which are still,
Okay.
ladies and gentlemen. These Chinese tickers move like crazy. It's bouncing off the 9. I still think it could bounce up, but we'll see tomorrow. If it doesn't recover tomorrow, we'll get out. But
Okay. If you pull up the 12-month chart, that just shows us like our year to date. So go 12 months, not weeklies, go 12 months. That way you just get one candle.
No, okay.
12 months. So that if you start at the base of that candle, that's going to be like our year to date. Okay.
29, 78, 40, 37.
So FXI is up what for year to date? And then look at HSI, look at KWeb, look at I guess you can look at
35% or so.
Yeah, so year to date, that's beating the S&P. That's beating the Nasdaq. Look at I'm trying to think. EWZ is Brazil. EWZ. What's that one year to date?
30. Wow, almost 40%.
Yeah,
That's crazy.
Look at FTSE, FTSE for the UK.
FTSE. Whoa.
Yeah.
The UK. What companies do they have? It's crazy. They're only up 13%.
Oh wow, I thought it was more. Okay, DAX, DAX. That's your German DAX.
They are up 18%.
Okay, so let's go SPX for reference then. What's the S&P year to date? Because it's not those. Like it's not up 18%. We're up like what, 11 or 12?
13 in it.
13.
Okay. 13.
Yeah, 13
so
and a half.
even so the FTSE is at that or exceeding. The DAX is better. China's way above. Brazil's way above. India's higher. That we might have this like reflexive rally in the US. But I think there are a lot of funds right now that are positioning for value, small caps, and non-US outperformance.
Yeah, DAX is up 19%.
Yeah. So DAX has been
Did I
outperforming.
do that
FTSE's
wrong?
keeping pace.
Yeah, 19%
Yeah.
roughly.
And yeah, I mean, and look, I'm not going to say like, oh, we need to trade emerging markets, because obviously there's a lot of risk in those. And for all these, like, I'm playing like I'm being a skeptic here. Everyone that's like values the greatest. Well, okay, so who's holding Russell small caps for the last 2, 3, 4 years and hasn't seen a single all-time high in 967 days? Like, put it in context, right? It's like you've seen S&P make highs. I mean, we're like 5th all-time in all-time highs right now, and it's September. Like the amount of like daily all-time highs we made this year after we got through the highs back in, I guess it'd be May, June is when we kind of broke the all-time highs from previous.
Right.
But it's like we've made like 25 or 26 or 27 all-time highs for the year. Year to date, that's like 5th all-time. It's like we just continue, like we're sitting right at the highs. Go higher, go higher, go higher, go higher. It's crazy what this bar count is of how many days we're just inching out to all-time highs at the market just refusing to go down. But my point is, if the global economy can match or exceed the US, it's very possible that if the US just doesn't struggle, the US just gets brought up by the global economy doing as well or better.
What was the Brazil one?
EWZ.
Wow.
That's a big one.
That's crazy.
Yep. EWZ is a good one. And then ILF is the other one for Latin America.
This is the thing with these emerging markets, though, is this thing, right? Because don't emerging markets always sort of, they lead the bull markets and they lead the bear markets. Like they fall higher, they'll rise higher, they'll fall lower. I know they fall lower when we go into bear markets, right?
They definitely do.
I don't know about leading in a bull market.
Yeah. But this is like the macro of like global PMIs on the rise. This need for energy, this need for commodities, some of these emerging markets, this is what they have. This is what they have are resources.
Wait, this is Canada.
Canada.
What's the Brazil? What's the
Oh,
Brazil?
Z as in zebra. Sorry.
I was gonna say,
Yeah.
I swear that's Canada.
EWZ. Yeah, all the EWs are like the non-US.
Well, even
EWZ is that was up like 30. Yeah, we did that. That was like 40%.
40%. Yeah.
Yep. And then ILF is Latin America, which is up comparable amounts. So I just think that these could be. I'm in both of these, so I have ownership of EWZ and ILF, because I think that this rare earth negotiation, like I don't think that the U.S. is going to get everything they want from China, and I think this negotiation back and forth is going to continue to be like China is going to negotiate very firmly on what they know they have over us, which is rare minerals, and they control a lot of that market. If we can get that elsewhere, like Brazil, like Latin America, like Canada, like anywhere else that's not China, I feel like the U.S. is going to probably align with those type of trading terms and partners versus always, wanting to go to the negotiating table with China, and China's like, okay, we'll do this, but here's what we need. And I don't know. I think China has the upper hand in a lot of these negotiations.
Yeah, well, also there's been a real focus on America sort of reorienting itself to the regional power status. We've let Latin America languish in our Middle Eastern excursions over the past 20 years. So it's a pretty good bull case for ILF, for Latin American shares, because if we do want to build, I mean, we have a strong alliance with Argentina and Malay. We're trying to nearshore a lot of manufacturing to Mexico. Like the northern regions of Mexico are an industrial powerhouse, and we're doing a lot of work to sort of shore up our support in the region. So I'm actually, I agree. I think ILF actually could be a pretty good long position, even here, honestly. Just because there's a lot more investment that's going to go in on.
Will you zoom out? ILF. Zoom out to, I guess, as much data as you can pull in, but even the near-term highs back in 2018, it's up to 39, almost $40 a share. We're talking 55 and 60. It looks like you just have a really good floor at like $20 and just a big wedge that if we are breaking above, $30 or so, it's like not much stops this thing until maybe 40. We go from 30 to 40. That's a pretty good rip on any, asset. If we go back to highs at 50 plus, that's a game changer investment. That's up 90%. I'll take a near double income anytime. But I just think there's a strong floor at you know, $20, which is why I was interested. I held it for a while. I've been in this one for a couple of years, but I mean, a lot of stocks and signals that were back to COVID lows that I thought had some value to it. This was one of them. So EWZ, ILF, I got into both of these around those COVID lows, trying to play some puts and some ownership. So not bad with having the map.
Yeah, Brazil is interesting because there is some political tension between us and between us and Brazil. But yeah, ILF. I'm gonna go.
There's a lot inside of Brazil too.
Yeah, I know, right?
Yeah.
So, but yeah, I mean, it's a huge economy. I've always wondered why Brazil doesn't get more notice because it is so huge, a massive country.
Corruption.
Corruption.
I would
Yeah,
assume that. Yeah.
yeah. But I mean, it's like I don't know how many people they have. Hundreds, 200 something.
A lot. Yeah.
Huge natural resources. Like,
Yep.
I mean, obviously they're part of BRICS and people have been talking about them, but they've always seemingly underperformed. But
what's crazy about them though, I mean, on the ag side of things, depending on the year, they can sometimes do 3 crops of corn and
That's crazy.
sometimes 3 crops of soybeans because they're right there on the equator, the northern part of it is.
Yeah.
So a lot of times they can get 3 in a year. So they have a huge production when it comes to, of course, corn and soybeans both. And of course they do coffee as well. So there's that.
Right.
But I mean that they're huge into those things. They're usually their first crop that they do in both soybeans and corn. They do not export it. They keep it for the country, and then the next 2 they'll export those.
How many do we create? One.
Yeah. Now
That's
you can do wheat twice, and they actually have short beans that you can do 2 crops a year in beans also here. Not very many people do that, but they can do that.
Yeah, that's awesome. That's crazy. I mean, yeah, Maggie, you can trade all these from America. These are all you can buy. These are all just American listed ETFs. These are all iShares. There's nothing like OTC about these.
Yeah.
Well,
these ADRs.
I was asking her which country she was in, and she's in America. I think she was wanting to know which stocks that she can buy that give her exposure to like the rest of the world. I think that's what she was
those
asking.
ILF.
There you go.
Yep.
EWZ, ILF, all that.
I mean, there's probably some broader emerging markets, but I feel like it'd be better to focus on one because, like, I don't know what the split is on like general emerging markets funds.
Yeah. Well, if you type in EW in TradingView, you can see Brazil, Japan, Mexico, Germany, South Korea, Spain, Taiwan, Australia, Canada, UK. Like I wish it's like, what's the general EW, like EW world? I wish that was an ETF to just get some non-US. So I do have some ownership of something that's SCHY. That is a non-US base, but it's heavily weighted in Europe and China. So it could be performing better, but right now it's like that's keeping pace or outpacing the US right now. But yeah, the EW tickers, you get a lot of those iShares like we have in the chart. So
yeah,
there's a good way to see those play out.
EW, look at all these.
Yeah,
Brazil,
you pick a country. Yeah, you pick a country. They're in there somewhere.
We're gonna just go list them all out. Belgium. No, I'm just kidding. Sweden.
Yeah.
I think those are actually safer than the FX ones.
Yeah. Who's the custodian of FX? Like FXI is that iShares? Large cap China?
I think it's iShares. We got FXE, FXC, FXJ, all those guys.
Oh yeah. Okay. I do have some FXJ.
So
no, I don't. What FX? What is my FXY is Japanese yen. EWJ. I have EWJ for Japan.
EWJ, that's right.
Yep. That one's been ripping to the upside. I've got a couple levels in that one. I bought that thing at like 60. Well, I bought it during the July crash last year, and then had a couple of dollar cost average levels in. So that's doing pretty well. I'm up about 23% on that one, which isn't too shabby.
Oh, Melly.
Yeah, Melly. Melly is this. I don't know if anybody knows. We got into Melly like with the Wealth Pen Pro. It's like the long term buy and hold stuff like 2023. But this thing has been a ripper, man. For anybody who don't know, Melly is like Amazon and Shopify. It's sort of like it's a what's that Chinese app called Weibo or something? I don't know. I have a friend that lives in China. It's basically the all-in-one app for like Latin America. But yeah, I mean, look, I'm I'm super bullish Latin America. I love going to Mexico. My wife is first generation Mexican. There's a ton of developments. There's a ton of problems with Latin America. But like in the hemisphere, that's where the population growth is, man. It just explodes. It's exploding. It's huge. I mean, it's a whole continent, Spanish speakers, right? Latin America.
Right.
So, but yeah, I'm gonna go along on this when we log off here today. I'm gonna get an ILF.
That's a good. I mean, if I'm looking at the trade from scratch, like I said, I've got a stake in that thing since the kind of April low, so I got a pretty good timed entry. If I were to look at it today, I would just do a stack of puts. I like it enough. It's cheap enough to do. If I wanted to say, okay, own 100 shares at $30, 30, 27.50, 25, like stack up some puts, maybe pull in some good income. Obviously having some like an allocation. If you're like, all right, I'll put in, $5,000. Okay, we'll do that at whatever you can buy at 28.58. But then put wise, be willing to own more, calculate your break even, and I hate buying highs, man. I'm so anti buy highs. Even though we're sitting here at all time highs in everything.
Yeah. There's
But,
not a lot of
you talk about buying highs. I mean, right now you've got gold up
yes,
43% and silver up 51% on the year. I mean,
it's amazing, man.
Yeah.
I'm so happy that I've just that is added like so much alpha to my portfolio and so much gains. Like just having that exposure.
Yeah.
They've been huge because I've been very passive into like August and September. Like I've not been bullish on this market outside of waiting for like a correction that it just hasn't happened. So as Alex said, like, yeah, Chris, you keep saying it, you're going to get it right. It's like, well, I'm not topping out the market, but I have been passively enjoying the melt up. It's just, I haven't been buying a ton. It's just like, I'm enjoying the melt up, a lot of ratio spreads, lots of puts, lots of out of the money stuff that's getting me paid. But getting something like SLV, having that exposure, I did some more dollar cost averaging last week on it, but SLV, pretty much every moving average, I'm buying more. Everything on gold, every moving average, I'm buying more. Like I will add more to it. I think that, who knows, man, this whole like 3 years, 5 years, like by 2030, I feel like these markets could be, we could see one of the biggest bubbles that we've ever had. And we could see one of the wildest swings. It's like, I will say that Trump is good at one thing, and it's like the extremes of extremes. So we could have like the greatest blow off top melt up market that we've ever seen to one of the worst things we've had since, like, you name it, put in insert Great Depression, financial crisis, whatever. But I think the issue with anything where the Fed has to come to the rescue is the amount of money it's going to take to do it. That's my biggest concern. We bailed out the entire global economy in 2008 during the Great Financial Crisis for a whopping $700 billion. And then we bailed out the world in 2020 for $6 trillion. Well, we backstopped a regional bank crisis in 2023 that nobody even paid attention to for like $2.5 trillion. And coming into this next, whatever it looks like, I mean, we've got global debt at like, I don't even know what it is, man. I mean, our US debt is 37 trillion. Globally, and we probably have 40, 45, 50 trillion dollars worth of debt around the world that's going to come due. But it's just, the can keeps getting kicked down the road. I think there's creative accounting when it comes to it. I just think the amount of pumping money into the system, it's like, it just is a feeder for gold and silver. I think it's a feeder for gold and silver. I think Bitcoin has its place there. But gold and silver is up, Bitcoin's not. Like Bitcoin is down for whatever reason. Bitcoin and gold and silver are crushing it to all-time highs again. Or at least gold's at all-time highs. Silver's making a run to get back to them.
Right.
So I think it's a great allocation.
Yeah, I don't see
Wow,
anything
Bitcoin's
between
down
here
what?
and the all-time high in silver anyway.
Mm-hmm.
I mean, it's just open air. Let's go get there.
Yep. Once you said 42 and that thing cleared, it's like now we're at 44 and running hot.
Yep.
It's beautiful. The miners are popping too, man. GDX. Woo.
Yeah, GDX looks really good.
Yeah.
Yeah.
We had some flows come in on that today.
Wow.
And Friday. Man, we should have just taken those on. I think we were talking about this on Friday. We should have just taken them on Friday.
What is GDX year to date? Because it's outperforming gold, right? GDX is like 60, 70% year to date. Does that seem right?
When did the year start? It started in January. Let's look.
Oh
122%.
my gosh. I was way off.
Yeah, that's crazy.
122.
Yeah,
That's insane. Man.
yeah,
That's insane.
that's wild. That's wild.
Golly.
A lot of this is what gold mine. Gold is what, Australia? There's a lot of Australian gold miners, right?
Which one? GDX?
Yeah, GDX. Where are these gold miners located? Where's like the prime gold prospecting?
Oh
days?
man, we got gold here. Australia's huge.
Yeah.
Of course, South America's got some. Hmm.
I think Australia. I've always heard Australia. Newfoundland has a lot, right? Canada's.
Mm-hmm. Yeah,
Where-
Canada has a lot too.
Where is I can't remember the country, but there's a region that China is willing to like spend like double what it would take to ship the gold back to itself because they know like how lucrative it is just to have it like hoarding.
That's crazy. Yeah.
I
mean,
don't
all the
remember-
central banks are grabbing as much gold
I
as
know,
they can.
I know. Yep.
Repatriation, that's a big thing. It's all flowing. I don't know. Supposedly it's all flowing out of Britain back to America. We're calling in this. I don't know.
Yeah.
That's a weird market. I'm not sure. Like, this is what I see on FinTwit. I'm not. It's opaque. What is there a silver miners ETF?
I'm sure there is. It's not one that I've traded. I've never, I don't know. I mean, miners have their place. I think that the reason miners took off so great this year is because gold was up, silver's up, and the miners are just
SIL.
like way underperformed. And you can see they clearly didn't take long to catch fire.
SIL.
SIL.
SIL, okay.
Sam, is that GPT? Did you AI that? Or are you that good, man?
Perplexity, there you go.
Perplexity. Ooh. Wow, they're up.
Micro.
No, wait, SIL.
You got it. SIL is the stock, not the contract.
There's your silver miners.
Yeah.
Yep.
Yeah, there you go.
Yeah, there's an SIL contract, but
Well, wow, exactly the same as gold, 122%. That's crazy. Man, these things are popping.
Yeah, they are.
Let's see, what's just for the week, I'm just what are the talking heads saying?
Nothing about gold. That's why I think this is so like this whole conversation of gold, silver. It's like nobody's talking about gold. I almost think like this is the most like blatant central bank, like money grab, power grab, like get off the dollar. We're going to debase the currency, but nobody's talking about gold. Like how is no journalist writing about gold? How is it not on mainstream media that like this is literally outperforming every major index in the world and nobody's really talking about it? Like why? I don't understand why. I'm saying like
Yeah.
we have, but like why is it not here? Well, you don't see anything on gold. This should be like blasting that just says like how to invest in gold bullions. They're suggesting people just like sell it. You got gold, you got bullions. We'll turn it in. You like just turn it in and sell it. It's like no man, like enjoy the spot price that could run to who knows how much.
Yeah.
Did I say this last week? I listened to a podcast where the forecast is that gold is going to become unaffordium and silver is going to become unobtainium.
Nice.
Because both in the long run could be, you know, just so expensive and so hard to find that they're both going to be just insane secondary markets.
Yeah.
yeah, there's actually more outstanding futures contracts / GLD shares bought than there is actually gold available.
Yes, and same thing with the futures. Like if somebody want to take physical delivery, you can't actually meet those contracts.
That's right. You can't beat them all.
Exactly.
That's fact.
Yeah, that's interesting. I'm still like my three, like, you know, for this week, you know, let's just go by the week, man. I don't know who knows what's going to happen 2 weeks from now. But like for the week, I mean, I still like if you look at the runners today, I mean, Big Bear AI, Sound, you got I mean, again, NVIDIA, So we're looking at AI again, can't fade AI. I still think so. This is something I think I don't know when this announcement's going to happen with TikTok, but where is it? Where is that? Something about TikTok. Aha. No, wait, no. Yeah, yeah. This deal is going to be announced soon. I mean, I have to think. So I think if the TikTok deal does announce, I mean, I think that'll be a catalyst for China stocks, just because it'll signal, especially if we don't really demand anything, from them. It's going to be a cooling of tensions between the U.S. and China, right? If we can make this deal happen, leave TikTok fairly intact,
Right.
I think the markets will like that. And then again, it's the same energy SMR. It's still climbing. Jeez. So
Uranium hit fresh highs today too. URA. It's a ticker I've been in for a while.
URA,
Yep.
UUUU.
Look at that thing, man. I've been in that thing since $20.
Yep.
Yeah.
And I regret to say that I closed it at highs at 45. But yeah, that limit was hit. No, limit was hit last week at 45. So that surge on Friday, or I'm sorry, last week. When was that day? 45 was hit. Yeah, it was hit last week. So I got out at the 45 limit order.
I got a 55 call sold against it.
Okay.
I'm long from 21.
Spicy.
That's awesome, man. Yeah, it's been I've been in this thing since like 2022. So it finally, started to have a big run. But like this whole rip in uranium and power, the nuclear plays and stuff, it's been a pretty good, I'd say a one-off. Like I'm not all in on any of that stuff, but having a nice run on URA, having a nice run on Oklo, and some of those other stocks have been popping this year.
And
have been pretty nice.
UEC is a cheaper one, but it's really good too.
Uranium Energy Corp. Yeah.
Yep.
Okay.
I really like DNN. Check that one out.
How do you participate in these now? That's what I want to know.
I mean, I don't see a bear case we were talking about this last week. I don't see a bear case for uranium. Like, I know buying at the all-time highs sucks, but what DNN, Denison, they probably don't have great options, but you could just sell puts. I really just don't see. Well, they have pretty good options actually,
Look,
but not great.
Look at what they used to be worth in 2008.
I mean, it's a penny stock, dude.
Yeah,
I know.
Yeah.
You're lucky to keep. I mean, that's the fact it stayed listed for that long is probably the big surprise.
Just a penny stock. I think they're sitting on like 2 massive unmined uranium reserves in the Canadian wilderness, so they've got some potential. Been watching that one for years.
Yeah, the game of picking stocks, it's so lucky. I mean, to get these like triple-digit winners and stuff, like it could be so lucky. I'd rather it's so much easier to trade the haystack, guys, in my opinion. If you can participate with the floating markets, it's like, look, uranium crushes it, energy goes up. So we talked about this last week, XLE, XOP, ExxonMobil, Chevron,
Right.
like any of those would be like, those are easier plays to me. Even if they don't go up triple digits, it's like a little bit of exposure, you get some gains. It's way less volatility in the portfolio. I don't know, like DNN, never be on my radar, Blake. And somebody like there's stocks that they're like, there's so many stocks, I will never find all of them, So like that constant search in the needle. And honestly, like, what's your stake? If I'm in for like, is this a 1% trade and I'm up, 1,000%? Well, that 1% goes to 10. Like that's a heck of a run, but nobody's flipping their entire portfolio in it. I don't know. Do you guys know Harris Kupperman? Does that name sound familiar? I know in our Slack channel, the KEDM gets posted. It's a published thing that he does with his Praetorian Capital.
So I've seen that. Yeah.
I follow Cuppy for a while. He goes by Cuppy. He's on a bunch of podcasts. He's out there. He's, this like very nonchalant, like kind of self-deprecating. He just like talks crap about everything. He's trying to fade AI. He's like very bearish on AI, but he's super bullish on uranium, super bullish on a bunch of other stuff. And he's a very like risk event driven portfolio manager. So, I mean, I would say right now it's like he's probably doing well because he's been like, into his eyeballs of like uranium and energy. And I think now he's starting to get some good plays because of it. But he's also like underperforms the broader market most of the time until he gets like these big swings that he's so concentrated in. So there's a lot of ways to do it. I mean, you can have like a theory and a narrative, and this is your trading focus, which is value that gives me, 10x upside. It might take 5 years to get it, but it still annualizes out to be about the same. Or you can get in the trenches and grind this stuff out every, day, week, quarter, month, whatever. I don't know. I guess you find your comfort zone, but I'm not the haystack. I'm not the needle in the haystack guy. That's just, I think it's very difficult to do and do it long term. Like, I don't know what the statistic is, but if you held a single stock for over 10 years, there's a good chance that stock is no longer valuable or valid after 10 years. Mag 7's been a bit of a phenomenon and an outlier because it's been what's carried this market and made, how long ago was it that our biggest company was under $1 trillion? And now I did the numbers today on just the Mag 7 or the top 10. It's like we have like $30 trillion in 10 stocks. It's insane how big these markets are now.
The ones that drive me nuts are the ones that, bought and held for a very, very long time and gotten out of, and now they're like, 400% higher.
Yeah.
I mean, I bought Microsoft at
Yeah.
$73 back in 1992.
Yeah.
And of course, by the time we did all the stock splits and everything like that through the 90s and everything like that, I ended up with 3,600 shares of that thing. And then they just went flat. And then they did a stock split.
For a decade.
Yeah. And then they went down to $25. And finally, from that $25, they went to 30. And I said, screw it. I'm out of here. And of course, I had, 7,200 shares. So I bailed it all. Well, I should have kept it, right?
Should have. Yeah.
Yeah.
Whew.
But yeah, it's crazy.
So if you don't want to pick individual stocks, Chris, I know you like to do something else. What do you prefer to do? What's one of your top strategies?
This is why I trade the indexes so heavily, because also if I want less volatility, I play the indexes. I mean, if let's say, Elon Musk does something that Donald Trump doesn't like again, and Tesla stock drops another 30 to 40%. Well, being all in on Tesla, that's a lot of volatility to deal with. But in the S&P, maybe Tesla has enough to drag it down a couple percent. So it's like that where Mag 7 is so big and so concentrated. It still isn't big enough to like drag the market tick for tick. Like Mag 7 was down 34, 35% across the board with ticker MAGs. That's like the basket of Mag 7. It was down like 35% this year's peak to trough, and we were down like 19 to 20% S&P. So I'm just trying to like reduce overall portfolio risk and volatility while also still capturing as much of the upside as I can. But I get it. Like it's a trade-off. I can't get, 200% winners on an index other than like an individual option trade, but I can't get like my portfolio to do 200% without taking just an insane amount of risk. I just think for me, it's all about like protecting the downside. I hate being that exposed to the overall markets where when the S&P is down 10%, I'm down 10, 15, 20% because I'm over leveraged and I've got stocks that are getting crushed. Meanwhile, it's like, I just want to, focus on what's my delta weighted portfolio, what's my beta weighted, like delta on my exposure. And if I can keep that low, I can be somewhat directionally neutral and hedge my downside. It just keeps me out of trouble. I mean, I like this year, it's like I'm creeping up on 30% year to date, and I've only had about a 6% max drawdown this year. I'm happy with that. Like, I get that if I wanted to say, well, I could have taken a 10 to 50% drawdown and I maybe could have made 40 to 50% upside. That's fine. But I also like being down single digits and the market's down 20%.
Don't lose money.
It helps me sleep at night,
Yeah. That's don't lose money, right? That's the number one.
Yep. Rule number one.
Trading axiom. But you have a way to like sort of get the best of both worlds, get some income along the way, right?
Of course, man. Lots of income trades. I mean, in fact, that's what I'm doing. It's like all of my profits this year outside of having, so gold, silver is like a percentage allocation, Bitcoin's a percentage allocation. I've owned very little stocks this year outside of those that I just mentioned. I do own some SPY, I do own some Qs, I do own some IWM, I do own some Dow, like index related. But the rest has been 25,000 option trades. That's my year so far.
Woo!
Just lots and lots of option trades.
So what's I like this. I like the strategy. One of the strategy. I mean, I like all your strategy. I like this one that you do pretty well. It's called it's like waterfall income, right?
Yeah, Waterfall has been great. There's two ways that I trade it: strategy one, strategy two. Strategy one, and we go through the mechanics whether or not you want to do a debit spread or credit spread, but essentially it's just dollar cost averaging with options as leverage and risk defined trades. and letting this market do what it does best, which is what we're literally watching. It just goes up, and
that's
it finds.
Yeah, I mean,
What's that?
the risk defined. I love that because
Yeah, totally
don't-
defined risk.
don't have to
Yep.
YOLO your whole life savings or something.
Exactly. And it's, I mean, our live trades, we've been in the service for about a year, and our live trades were at 93% winners. So we only lost one trade during this entire debacle from February's rollover into April's bottom. We lost one trade, and literally every week since April, it's been positive, positive, positive for 5 straight months. So feels pretty good, man.
How does it work?
Are you leading me into something right now, Alex?
I'm just asking questions, man.
Okay. Well, like, am I supposed to talk about this more? Well, no. So I mean, it works with if I let me see here. You've got the screen, Alex. If you want to keep running, go to the weekly chart. Just use the cues for weekly chart.
I'll give it to you. You want to show it off?
Okay, sure. Blake, honestly, like, am I in the dark here? Am I supposed to like go into something that I'm not?
No.
We're just talking.
We're just talking, but I
Okay.
am gonna play a video of it
Got
afterwards.
it. Okay, I just want to know. I was like,
Yep.
Alex is teeing it up, and I'm like, hey man, I think I know where you're going with this.
Yep, you got it.
All right, cool. So we have a masterclass, by the way. So I'm going to do a 2-day masterclass workshop this week on Waterfall income. So whatever Blake is going to show you, if you like what you hear, check it out. Come into class with me on Tuesday, Thursday. I posted a live trade today. So let me bring this blank workspace up. I'll just get this nice and clean. So QQQ, this should be nice and clean on the weekly time frame. All right. So what I want you to kind of first think about is any kind of big sell-off we've had. Here's a crazy stat. Okay. In the last, I think the last 12 years, we'll go back to like 2015, 16, or I guess 2013 or so. In the last 12 years of trading, I wish I could go back a lot further, but like 12 years of trading, we've had 7 corrections of over 20%. And this strategy has still produced 95% plus winners, like 97% over that same 12-year study. So what I want you to think about is if you could have a way to, one, trade the market with the inherent bullish bias, which is every market environment is the bull markets last a lot longer than the bear markets. We know this. The market is clearly trying to do everything it can to bottom out, go higher, melt up, because we constantly have this loss of purchasing power, debasement of the currency. This is not going away. If the U.S. wants to onshore manufacturing, we're going to lose a lot of purchasing power in the dollar. Just know that. This is why gold is ripping. This is why silver is ripping. This is why Bitcoin's up 30% for the year. This is why the indexes are still up off this crazy April low. So if anything that you see here, like, let's go back to that 2015, it hasn't been perfect. It has not been like straight up. We've had a 20+% correction here in 2015 and 16. We had a 2018 20+% correction. COVID.
Are you sharing your screen?
Oh, I'm sorry, man. Yep.
No,
I
you're
don't know
good.
if we're. Yep. I'm just talking. Whatever.
Oh, you're just talking. Well, dude, you don't have to share. You don't have to share. You can just talk, man. I love talking.
All right. I was pointing through the 2015, 16. So this is a 20+% correction. Another one. It went sideways for 2 years, and it still made money. 9 times out of 10. 90 plus times out of 100. But what I want to show you, illustrate, is even though the market is up, down, sideways, I have a strategy here that is cushioned for a lot of forgiveness. And I have some crazy numbers here, taking like a 50K account and turning it into over $1 million, a $100,000 account to $2.5 million, a $25,000 account into $600,000. Like, it's just showing like the mechanics and the strategy work. I'm never risking more than I can afford to lose. It's always defined risk. So even if the market is something really crazy and silly, we're still going to be okay because we're not losing more than what we set out in the very beginning. So I just want to illustrate the market's not perfect. And yes, it's gone down at times, but if it can, every time we start a week, if you give yourself a 15% buffer, I'm just going to draw this out. Think about the black line that I draw here will kind of represent every week going out about 15%. Okay. And what you're going to notice is most of the time, I guess I can use the purple line, which is the 200-day moving average. Okay. That purple line is 20% lower. Okay. Now this is the NASDAQ, which is naturally a little bit higher volatility than the S&P, but I trade this in SPX, XSP, SPY, Qs, DIA, Russell, all these indexes, because I think they're all designed to do the same thing. And last week, it reinforced this strength of the bull market because we had Russell at all-time highs, Dow at all-time highs, NASDAQ all-time highs, and S&P at all-time highs. I think that's why the sentiment finally switched over and got us more bullish. So point is, if I can start every week with one of my strategies as a, 10, 15, 20% buffer and still make money. And I'm only risking, let's say I'm risking, $5,000 a week. Just an example, I can still make 1,000. If I'm risking $1,000 a week, I can still make 200. If I'm risking $500 a week, I can still make 100. So I'm getting about 20% return on risk every single week. And what you'll notice is most of the time, this market is going to proceed to go higher, 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 higher. The only time that we've lost on a strategy like this is when the market in 2022 was down for more than a couple of months, because usually these are swing trades. This is 2022. This was a 10-month peak to trough. Okay. And I want you to know that in this environment, I took 0 losses. I survived 2022 with this strategy. I survived COVID with the strategy. I survived 2018 bomb again with the strategy. I survived this Liberation Day 2025 with this strategy. We took 1 loss in 2025, and it was because our positions were expiring in March, April, and they were taken from the, December highs. That was the only trade that got us into trouble. And that was a 1 loss over the rest being literally positive from before and after. So you want flexibility in income consistently, confidently. I will say that my waterfall income is actually my go-to, like, I'm going to say like active retirement. I know that might be maybe oxymoronic, but like to me, I'm never going to be passive. Like there's no such thing as passive when I'm at least trading every week. Okay. So I'm going to show up and trade this every single week. This is what I do for the service. We show up and trade on Mondays. The trade is live right now. We have a masterclass this week on Tuesday and Thursday to teach you the core strategy 1, core strategy 2. The results, I couldn't ask for anything better. The P&L is rock solid. The winning rate is high confidence. And guys, so you know this, like I talked to Nate about this a couple weeks ago, and Nate already told me he's working on building like a waterfall income bot for himself so we can put it into his retirement account. Like that's how much he believes in a strategy like this. So you can see the presentation. I've got the master classes. I want you to learn the mechanics of it, but knowing that we have a high degree of confidence to take this trade, knowing that we have some margin for error. I mean, the reason I've been cautiously bullish is because I think this market is likely going to give us a technical correction. Now, to what degree? I think what's going to be the easy trade is if you're hedged to this initial decline, everyone's going to be fine on that hedge. It's the second leg of that that's going to hurt, because when all of a sudden the VIX goes to 20, 25, 30 or beyond, nobody is paying for those puts on that second or third leg down, right? So what we want to see is like the immediate dip that gets bought and it goes right back to the highs and then nobody gets hurt. But it's when it goes down and down again, like it did in 2022, that lasted 10 months, we can still survive a strategy like that with waterfall income. So anyway, that's where it's at. I appreciate you teaming me up there, Alex. That was kind of you. I had no idea, but
surprise.
Yeah, thank you. But Tuesday, Thursday, masterclass, 1 o'clock Eastern time. And I want you to go through the class with me. I've done this the last like month. I think I've done like 8 or 9 masterclasses just because when I have new students coming in, I want to teach you. There's a decent amount to unpack here, but it's very straightforward. It's like there's a core strategy 1. This is when I use it. There's a core strategy 2. This is when I use it. Right now I have 12 open positions that are built up to kind of stack in those wins. We are literally positive on 11 of the 12. If I wanted to take profit right now, I would close out for another probably 3 to 4% in my account. But I'm gonna let them run because we're in a high probability trade. I like the mechanics. I think that the options chain, where we're at right now, it's like everything looks good. We're way out of the money on these trades. Like these are literally 17, 18, 20% buffers. I don't think price is gonna pull back that much. So I want to pull in, 80, 90% of those profits. We closed out 3 winners in the last couple of weeks. IWM were some good ones. We had 3 winners on IWM because it was one of my big index plays that I called this year. So anything index related, SPX, XSP, SPY, Qs, Russell, so IWM and DIA. I trade all those and we have those trades running. And we show up and trade every single week like clockwork. So that's my spiel, fellas.
Awesome.
I love these things.
Cool.
People, you should learn how it works. Everyone watching.
It's
That's right.
it's my favorite retirement strategy, and I'm not retired. I'm not going anywhere, but it's my favorite kind of routine, low maintenance, show up and trade every week. It's a very simple approach to, if I could introduce somebody to basically get it into the markets, learning options, dollar cost averaging, this is a great way to do it. And you're basically taking advantage of a massive phenomenon the market's done for like 70 straight years. So That's not a bad thing to side with is history, you know.
Absolutely not.
But of course, guys, can be different this time.
Yeah, as
Yep.
like this September, everyone thought it was going to be bearish. Nope.
Yeah. By the way, I did look at that. I want to see how many Septembers were better than this, and actually, we're a lot. We're like in I think the 4th or 5th best September of all time. But we had some Septembers that were like 7-8% for the year, like pretty crazy. Everyone hates on September.
Don't hate on September. I love
Oh,
every
man.
month. Maybe not February.
February to April is kind of a tough one. That's when we get some pretty nasty like OPEX corrections. That like 60-day window can be pretty nasty. But yeah, usually September is just like the market needs a purge, get out of its system, and then it's just like it's a lot of window dressing for Q4. I think the markets do whatever they can to kind of keep Q4 floating and keep animal spirits high, and then maybe a little bit of a dip through December if we don't have a Santa rally. But I think the market's done a pretty amazing job just recovering off these April lows.
I always thought the Santa rally was from the middle of October to the middle of December. Then you go, bye-bye, I'll see you next year.
It's just like it's like at Michael's, man. The seasons just get longer.
Yeah.
Well, let's let you. I'm sure everybody, you laid the groundwork. People want to learn, kind of the nuts and bolts how this works. Shall we get into it?
Yeah, let's do it.
Let's do it.
Thanks, guys.
But,
Thank you.